Hello there, fellow investors. Welcome to our channel. Today we have something special in store for you. We'll be diving into the world of investing and discussing investment strategies. This information simulary tracks with a book called A Random Walk Down Wall Street, which has been a game changer for countless investors, including myself. We're excited to give you an ultimate guide based on its principles. So, let's get started. Before we jump into the nitty-gritty, let's briefly touch on what A Random Walk Down Wall Street is all about. In this book, Malkiel introduces the concept of the efficient market hypothesis, which basically says that prices of stocks reflect all the information available. He argues that trying to time the market or actively pick stocks is useless. Instead, he suggests a passive investment approach through low-cost index funds, emphasizing the importance of diversification and a long-term investment horizon. Now let's break down the ultimate guide for investing based on Malkiel's book. Invest in index funds. Malkiel's first and foremost principle is to invest in low-cost index funds. These funds track a specific index like the S&P 500 and provide instant diversification across various stocks. By investing in a broad market index, you can capture the overall market's returns without the risk of picking individual stocks. This next one is a must. Diversify, diversify, diversify. To further minimize risk, diversify your investments across different asset classes, industries, and geographic regions. Don't put all your eggs in one basket. By spreading your investments, you protect yourself from any single investment's potential downfall. Keep costs low. Malkiel strongly emphasizes minimizing investment costs. High fees can significantly eat into your returns over time. Choose low-cost index funds or ETFs that offer similar exposure without charging excessive fees. Remember, compound interest works for you, but fees work against you. Invest for the long term. Malkiel discourages market timing and day trading. Instead, he promotes a long-term investment strategy. By holding investments for the long run, you can potentially benefit from the market's overall upward trajectory and avoid short-term market fluctuations. Embrace the power of rebalancing. Rebalance your portfolio periodically to maintain your desired asset allocation. This means selling some of your winners and buying more of the underperforming assets to restore your original balance. This disciplined approach ensures you don't become overly exposed to a single asset class and helps manage risk. Now that we've covered the key principles from A Random Walk Down Wall Street, let's address some common questions. Does this mean I should never pick individual stocks? Malkiel doesn't outrightly reject stock picking, but he suggests that it's incredibly challenging to consistently beat the market. If you're passionate about stock picking, allocate a small portion of your portfolio to it, but the majority should still be invested in low-cost index funds. What about cryptocurrencies and other alternative investments? Malkiel's book was published before the cryptocurrency boom, but his principles still apply. Be cautious with alternative investments and ensure they align with your risk tolerance and investment goals. Diversify within these alternative investments too, if you choose to include them in your portfolio. That's all for today's video. If you found this guide helpful, don't forget to give it a thumbs up and hit that subscribe button for more investment tip. As always, stay curious and keep investing wisely. Until next time.